All right. Morning, kids. Fired up. Big day ahead of us. All right. Let's jump into it. Last night's session on the S&P last night. So it's kind of in a perpetual drift down. We kind of got down to, after selling off for the first half of the session, small bounce, moved out to the right, and then came back down and kind of closed more or less close to the lows of the day's session, which was flat in most markets outside of the S&P, or sorry, outside of the Nasdaq. Nasdaq took a beating because of Apple. Apple plummeting hard because Samsung unveiled two new real products. They unveiled a kind of a wraparound screen on a phone, and they also announced a partnership with Oculus Rift, the company that Facebook's now bought, where they're going to be able to clip their large phone into the front of this new headset that they're putting out. And you can imagine, obviously, the speculation around that. So Apple sold off heavily, obviously, with Samsung being the major competitor, thinking maybe they're a little bit behind the curve on that whole story. And that was the big sell-off really in the Nasdaq, being such a big weighting in the Nasdaq. It's also a major weighting in the S&P, so it dragged the S&P down a little bit. But other than that, I think markets are just kind of pushing out to the right, waiting for the major conversation today out of the ECB, which is probably going to dominate markets today. We did have things like factory goods orders that came in, biggest gain on record. We continue to see the data out of the States being absolutely power. Fed's Bayes book came out as well, showed continued economic expansion in every single one of the Fed's regions. So like we said, that the data set out of the States continues to be spectacular. The rest of the world continues to be soft. Obviously, we're continuing to be the reason why we're expecting heightened expectations out of the ECB today. All right, in Asia, same sort of thing. Everybody just kind of in wait and see mode, I think, ahead of that ECB today. We had a little bit of drifting around on the back of some of the property companies in China and things like that. A little bit better than expected data out of Australia, but like I said, no one's going to make any big moves probably right now ahead of the ECB today. So we're just in wait and see mode most likely until that data point comes out today at 1:45. All right, to put a little expectation list here from some of the investment banks today, and I think this is really important. To me, this says everything for today's data point and how big it is and how big some of the expectations are, but how big the disappointments can also be. So you've got the bulk of the investment banks that are really expecting some sort of loosening measure. You've got Nomura, which is expecting a 10 basis point rate cut, which I've never heard of any central bank moving as small as that. I don't think that makes one bit of difference to me. That's a big negative, so you can freaking mark that one in red. And this is my personal view, obviously, but if they come out with 10 basis point rate cut, you might get an initial spike. I think the market's incredibly disappointed. JP Morgan also seeing lower interest rates. To me, that does absolutely zero. I mean, what good does it do if you move from 25 basis points down to 15 basis points in your benchmark interest rate? Then we've got Deutsche Bank, which they're actually expecting the big move, and to me, this is kind of what some of the whisper, or not some of the whisper, this is what I think the market is going to need in order for it to kind of maintain itself, and that's for them to come out with some form of asset-backed purchases across the region, a form of, call it, private QE. Problem with this is, it's going to be really, really difficult for them to pull this off without kind of having gotten some sort of prior approval out of Germany, because Germany really is everything for the ECB, and considering that, they can't really, that their mandate doesn't allow them the flexibility that the Fed's does, because they can't control the fiscal pocketbook of all of the nations around the Eurozone. That's why that makes that very difficult. So that were to happen, if they find a way to pull it off, that might be a way that the market can sustain itself after running up in expectation for great things today in the ECB. Like I said, I don't know how likely it is, but that is the scenario that probably continues to keep us at these levels. It maybe even elevates us a little bit further. Then you've got Goldman on the total opposite end of the spectrum of they're expecting the ECB to do absolutely nothing. Some of their comments around that were that they don't believe that the the ECB is going to be able to pull off anything substantial and without, like we said, prior approval out of Germany, or without doing something special for Germany around it, and also because they've some of the more recent moves that they've made, that them wanting to see how it plays out a little bit more and leaving the window open for December. I think if that happens, the markets are hugely disappointed and will take a proper beating today. So keep that in mind. Like I said, I think there are big expectations on the ECB. To me, this is everything. This could potentially be a monster turning point for equity markets, and it's going to set a big precedent today. All right. Somebody else who might kind of think that they're not going to meet expectations today is George Soros. If you see their fund, they constantly, you can see there their exposure to the SPDR S&P 500 ETF. It's a put notional value, and you can see there that they've got monster exposure right now to the short side on the ETF. Obviously in some of the small exposure, that can look very much like that can just be hedging a little bit of a big long book, in single stocks and things like that. Bottom line is this kind of exposure is showing something along the lines of $2 billion of downside exposure in the S&P. So that's a big bet, and that's a big bet coming from a big name. So just keep that in mind, thinking that there could be a big sell-off there from George Soros. All right, African Rainbow is out with full year numbers this morning. We had a trading statement before. Guidance came in lower than expectations, consensus expectations at 2033 or 2030. That was Bloomberg consensus. But the numbers that came out this morning look like a nice beat on the prior guidance. The divvy also looks like a bit of a beat. Sales up 36%, and they also they have a bit of a cautious tone kind of going forward in their outlook, especially around the iron ore side. If I'm not mistaken, their platinum group sales were where they really tacked it on this month, and so I'd be interested to see how the market takes it. Some of these things have been under pressure. We've dropped out of some major support. We've shown that chart before. I'll probably have a look at it again this morning just to kind of remind you what that looks like, and to show you where the major numbers are or the major levels are that they'll have to get back above to get above resistance. But bottom line is maybe a little bit better out of African Rainbow. We'll have to see how the market takes it today because of the cautious guidance. All right, we had full year trading statement as well out of Pioneer this morning. HIPS guided more than 20%, further guidance to be provided when there's more certainty. And then Senlum as well came out with numbers this morning. Headline earnings per share came out at 223. I'm not sure if that's a touch soft on the guidance, which it looks like there, but obviously better than what the prior consensus was. And it looks like the equity value per share is up 14% to 42.77. So a lot of numbers today. I think we're going to see some things ripping around today a little bit, but maybe a little bit sideways on a lot of the shares with no news until we get to the until we get to the ECB this afternoon. All right, we got factory orders that came out this morning out of Germany, actually significantly better, which is a surprise because the prior data sets that have come out of there have been absolutely shocking. Maybe it had something to do with new home with the vehicle sales that have been happening in the States of late, which came out yesterday and were a huge beat. We've also got BOJ monetary policy statements happening right now. We've got Bank of England rate at 1 o'clock. That's going to be interesting to see some of Carney's comments around that because he's just been going from pillar to post on his posturing in the market. At 145, we've got the ECB main refinancing rate. which is the survey is obviously for 15 basis points. I think, like we said, a lot of people are expecting them to cut this thing down to almost nothing. Deposit facility rate obviously is running at a negative in the moment, so we're going to see what they're going to do with those two things. This is going to be a major data point. To me, this is probably the biggest data point potentially that we've had all year, or that comes out today, and the comments that Draghi will make. Then we've got ADP employment change in the States later today, as well as trade balance, initial jobless claims, market services PMI, Bloomberg consumer comfort, and ISM non-manufacturing. So a hell of a lot going on today in terms of data. Second half of the day going to be hugely important. Keep your eye out for those numbers. I think it's going to be some there's going to be some exciting action this afternoon. All right, let's get into the maps. First thing we're going to look at this morning is the FTSE. Going to look at this on a 2-year. Excuse my chart. I don't know why it's just gone retarded on me. But you can see that there's you can't even see it here. Man. For some reason, the last couple months hasn't been charting it properly. Okay, if you can see that little dot there in the upper right, that's where we closed yesterday. I don't know what the hell is going on with my charts, but for some reason my FTSE chart's gone totally skew. We're going to take this from the top of this little wick. We're going to run it straight across. You can see how how consistent that level is. Our little dot, we literally closed right on the number there, more or less at call it 68.73, which is exactly where we closed. Call it 68.75 that we'd have to punch through to break out. You can see the FTSE's obviously right on this level. We've been in kind of an ascending triangle pattern for the most part. Take out that little blip that we dropped out here recently, and the pullbacks have been kind of getting smaller and smaller and smaller on the FTSE here, really starting to feel like we're looking for a breakout. If we see us start to get above 675, I think if we can push even 10 points above 68.75, I would say that we're breaking out there. And this is significant because this one has been a real laggard, especially over the last few months with the rest of the markets rallying. Obviously, this is a mining heavy index, so it could maybe give a boost to our local miners. So keep an eye on this one today on the FTSE. Obviously, if we get something really powerful out of the ECB, this will probably run. All right, we'll look at BGA. I'm actually going to back all the way out into a 5-year chart here just so that we have a little bit better look at ABSA, or Barclays Group Africa, whatever you want to call this friggin' thing. But you can see there, really testing the all-time highs here. What did I do? Hold on. Oh, gosh. Give me 1 second, guys. Sorry about that. All right. Okay, we fixed it. Okay. Okay, so you can see here at, call it 173 and a half, somewhere up there. We're at all-time highs in ABSA, and we really pushed up hard yesterday. I mean, if you shorten this up a little bit, we'll shorten it up all the way to about, call it a year and a half. You can see there that those are really wicks as well, and I think that we can probably even punch a little bit higher potentially. I think that on a closing basis, yesterday's close is very close to a closing high. If you see, in fact, it may be an all-time closing high. Let's just see what that close was here. Looks like 72.30 was the previous closing high. We closed at 72 and a quarter yesterday. So we closed 5 cents off an all-time closing high yesterday. That's very, very significant. So like I said, we've got very little. We're right here testing the absolute tops of BGA. This thing pushes just a little bit more. It's going to be breaking out, and I think it could be breaking out in style. I would look for an initial target here, probably about $8 to the upside here. From 165 from the breakout, it would happen at 173, and would target us up around 181. So, and then I think longer term obviously has more than that. So just watch BGA. It's really been hot of late. All right, let's look at Kumba. Man, my chart doesn't look right here, man. Okay, whatever. Anyway, you can see here Kumba punching out through obviously breaking down. We've been all over this, showing this to the downside. We've been all over the call on the iron ore sell-off. The height of this channel is about 40 Rand here, and when we dropped the support, we were at 340. Call it 342, 343. So we're looking for about $40 a downside, which takes us to just above $300 on the target here, which we really got to yesterday. I think we traded to 304. So I mean, call me, calling it early for a couple bucks. But bottom line is we more or less got into our target here in Kumba. So I think, you can see how many red bars we've had in a row. I really think that this thing is to be sold on bounces until we have some sort of bottom put in on iron ore, because iron ore has just been getting decimated. And I think these guys really it just hits their bottom line so much more every single penny that starts to come off from these sort of prices. So just watch this one. I think we're getting closer to a bottom at the moment in the short term, and like I said, I still think bounces are to be sold. Okay, we're going to look at Impalas here. Impalas had a major reversal at the end of yesterday. I'm going to go to all the way as short as a 5-day chart. You can see here we've been, oh man, you can see that we've been ripping down here the last couple days. Just give me 1 second. All right, whenever you're ready. Okay, here we go. We've been in this downtrend, pretty sharp downtrend for the last few days, and yesterday we made a huge reversal. What I like, I don't know why this thing's not working. What I like about yesterday is you can see here, this is the start of yesterday's session. We opened up just south of 93. We really just bombed out the whole first half of the session. I mean, we're just under huge pressure, just trading lower the entire time. And you can see here, toward the last few hours of the session, we really just made a real reversal and got really vertical. Hard reversal here at the end of the day, bounced 3% off the lows to close more or less at the highs of the day, and to close well above the where the opening was after we had already pushed down a few percent. So for me, this is maybe marking the end and marking the final completion of this target out of Impalas. If you follow our Twitter handle, you would have seen yesterday or maybe 2 days ago we were showing that this thing was right at the target anyway. Out of dropping the target on this little narrowing wedge, it was right down here close to $90. We pretty much touched it, kissed it right on the nose, and made a reversal off of that. So just watch. I think with short-term bottom potentially could also be in Impala. So just take note of that. All right, on the other side of that one that's been trending up incredibly aggressively, it's been in a little bit of a range here, is a little bit of a range. It's been in a little band on a major uptrend. As you can see there, that's not drawn all that well, but whatever. Bottom line is we've been in an uptrend, a very steep uptrend going all the way back to February. We were below $180 in February. Yesterday we pushed up. They closed us up again in the auction, pushed us up a couple minutes before the auction as well. Well, the reason why I want to show this here is because when you have a stock that's kind of been trending as hard as this, toward the end, usually when you're starting to reach at least some sort of short-term highs, you'll start to get more and more vertical at the end because the stock kind of has to capitulate to the upside. Really, the inverse of what has to happen in the share like Impala. If you get my drift. So we've been in the downtrend here in Impala. I don't know why that just drew like that. We've been in a downtrend here in Impalas, and we've kind of actually broke the downtrend to the downside. You can see there we got 2 red candles, and then we got a real reversal here. The reason why I'm showing RimGrow, I'm kind of expecting that same sort of thing to happen here, with us potentially spiking up through and out of this major long-term uptrend, and just getting totally vertical before we can actually get a reversal out of RimGrow. So watch this one closely. I think that it's getting very close to that point in RimGrow. If we look at Mr. Price yesterday on the back of its earnings release popped out to a new all-time high, all-time closing high, and yeah, I mean, looking at this kind of continuation pattern that we're seeing here, I would say that we've probably got as much as $15 to the upside potentially in Mr. Price, and just continues to defy gravity and continues to go. So you just got to go with it. And then the last one I'm going to show this morning is Steinhoff, which totally broke down yesterday. This is a perfect example of why not to get involved in the consensus trade. Doesn't matter how good the story is, especially if the consensus trade is not working. This thing broke down hard yesterday below the 51 level, and once it did, the market really puked it up. I think a lot of guys starting to get margin calls. Remember, a lot of these guys are piling in, kind of just before they announced the rights issue. Obviously, that put a lot of pressure on them. A lot of guys kind of doubling up as we found some sort of level down there around the rights issue level. Then yesterday, I think the market totally puked it, closing as low as 48.52. How much of that overhang in the stock is still left is a total guess. I think first level of horizontal support comes in around 47, and like I said, after looking after that, it's anyone's guess. So just keep that in mind. This thing could be interesting. And you know what? I'll show one more. I'll show ARI. I said that I was going to show that this morning. ARI's got a couple things going on. I know we had earnings here this morning. We'll have to see how the market's going to react to that. Obviously, you can see that we dropped support, which we showed a couple sessions ago, and we were really dogging the iron ore stocks. If you look here over a slightly longer period of time, sorry, I don't actually need to go anywhere, you can see that we've actually got a bit of a head and shoulder setup going on in ARI as well. It's not incredibly clean, but definitely looking head and shoulder-ish, and we're below the neckline here. So actually a huge downward target here if we can hold below this level that we broke down from, which was I think all the way up at 185. So like I said, if we can hold below 185, this thing potentially has some more downside to it in ARI. And that's it for today, guys.